Thank you for joining us. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. On the show today, Ghana weighs Panda and Somarai as $2.5 billion bond sale nears. Zimbabwe to compel mining companies to list on local exchange. Plus, South African government signs $4.7 billion of delayed renewable energy deals. We start off with the markets, and here in Africa, South Africa index, the JSE, was leading the pack at intraday, trading higher at 2%. Egypt and Nigeria were down 0.52% and 0.10% apiece. Kenya closed 1.03% up on Wednesday. And in the Middle East, the markets were mainly in positive territory at intraday, with Saudi Arabia's index continuing to rebound after several days of profit-taking. The Saudi index was up 0.90%, with United International Transportation Company up 2.2%, and loss-making Saudi Arabian home furnishing makers Al Soraya trading climbing 2.2%. The Abu Dhabi index also gained 1.73%, with Abu Dhabi National Energy climbing 2.4%, taking its surge since March 13 to 11.5%. The Qatari index was 0.96% higher. Commercial Bank was the largest gainer, climbing by 3.4%. However, Dubai's index slipped 0.25%, with Emirates, Dubai's largest Emirates NBD, Dubai's largest bank, falling 3.3%. And in Europe, equities rose sharply higher in early trade as trade tensions eased. For more, here is Ulrich Bartz, my colleague at the Frankfurt Stock Exchange. Hello, Ulrich. Good afternoon. Good to have you back on the show.
Thank you. It's good to be back.
Right. So the U.S. is now willing to sit down with the Chinese authorities and fix their trade differences. This seems to have calmed the markets. But do you think Washington and Beijing will eventually come to a compromise?
I think they have to come to a compromise because they saw what it did to the markets and how everybody was commenting on it. And the Americans saw how quickly and how drastically the Chinese reacted to the second round of tariffs that the White House proposed. So basically, it's in both countries' interests to come to an agreement. And economists know this, the people in the market know this, and they're direly hoping for the president and the president in China to come to the same conclusion. The question is now, who will start? Who will make concessions first? And will people make concessions on things that are important to them? Donald Trump on soybeans, for example, or the Chinese on electronic components that are built there and that secure many jobs in China. The negotiations will be quite difficult, but they are negotiations, and where there's talking, there's at least a chance for a compromise. It would be very important for the world economy, also politically.
Okay, let's look at some of the data coming in today. The Eurozone's PMI slightly under expectations. So how does the market number stack up for the leading and the laggard economies within the region?
Yeah, there's quite a difference. Germany, again, in the Eurozone is doing very, very well. And disconcerting is that Britain, one of the largest economic and political nations within Europe, within the EU, is among the laggards. The PMI for the first quarter increased by 0.6%, market says. And for Britain, the number is only half as much. And here clearly you see the results not only of a big snowstorm that affected all the countries in Europe, or many countries in Europe, I should say, not Spain or Portugal, for example, but the northern countries in the month of March. But of course, with Britain, the case is that the looming Brexit and the lack of progress, the lack of clarity that one sees right now is clearly responsible for the economic mood that is deteriorating there, and makes for a different picture. It's still a growth scenario, but much less optimistic than elsewhere.
Okay, put the latest PMI and services sector data into some market context for us for Europe in the first quarter of 2018.
See this, yeah, you can see this very well if you look at the equity markets. For example, for the Euro stocks or for the DAX here in Germany, the first few months of the year, yes, they were disappointing because the market turned south in March. But until then, it was record highs, for example, for the DAX here, but also for Wall Street over in New York. And the mood was generally buoyant, and shareholders had quite a ride there for a while. Now things are looking a bit more sober. Different picture in Britain. After the Brexit, the FTSE went up because the pound went down, and that increased competitiveness, the currency playing a great role in that factor. And since the beginning of the year, with Brexit skepticism setting in more and more, the FTSE has been in decline. Didn't go up to those record highs that other markets saw, and is joining the others in the March decline. So you can see the different economic picture and outlook and assessments being mirrored in those markets.
All right, thank you very much for your time, Ulrich. See you on Friday. We move on now to the U.S., where stock index futures posted solid gains ahead of Thursday's open following a roller coaster session seen during the previous trading day. Around 6:50 a.m. Eastern Time, Dow Jones Industrial Average Futures rose 53 points, indicating a jump of 86.70 points at the open. The Nasdaq and the S&P 500 futures also indicated a positive start to Thursday's session for their respective markets. Now, another topic of key importance to investors is surrounding the topic of technology, while market watchers will be keeping an eye on what President Donald Trump says about Amazon. The main talk of the town is likely to be Facebook. Switching focus to economic data, Thursday is set to deliver the latest in jobless claims and international trade, both of which are due at 8:30 a.m. Eastern Time. That's about now. And in Asia, Pacific markets closed higher today as recent investor worries over an elevation in U.S.-China trade tensions abated. Japan's Nikkei 225 advanced 1.53%, closing above its 200-day moving average. The Kospi tacked on 1.22%. In Australia, the S&P ASX 200 edged higher by 0.48%. Gains were also seen elsewhere in the region, with Singapore's Straits Times Index up by 2%. Hong Kong, China, and Taiwan markets were closed for the Qingming Festival.